The truth about Light stock, or Lumentum Holdings, whatever you want to call it. I think Light's a pretty good name for them. It kind of describes what they do. They're basically in like the commercial laser industry. So they sell like some super cool optical stuff, and they do like some sweet manufacturing. According to good old Yahoo Finance, if we scroll down a little bit, we'll see that these guys are basically in the business of manufacturing photonic products. So if you're a super smart sciencey guy, I guess that means like lasers, and they do it across the world. So it's not really just in America, it's also in the Asia Pacific, in Europe, Middle East. So they're kind of all over the place, and they do optical communications and then commercial lasers, which is pretty high tech, super interesting, super cool, and like it's really impressive. Obviously, it's worth a lot. They bring in about $1.5 billion in top line revenue every single year, and their profitability has been a little bit wishy-washy. They made $250 million one year, then they lost $100 million another year, so that's a little bit disconcerting. When we look at the current EPS right now, they're at negative 0.04 cents a share. So I guess you've got a little bit of volatility in the underlying profitability of this company, which is interesting because like the way it looks right now, top line revenue is growing pretty well, and even though top line revenue is growing, they're sort of struggling to turn that top line into like actual earnings at the end of the day. Sometimes they lose money, or sometimes they lose, and then sometimes they make money, and then sometimes they lose money, and sometimes they make money. And so this kind of like wishy-washy inconsistency is really not optimal for like a longer term investment. And sometimes this happens when a company is just starting to mature, so that might be the case here. These guys, they went public in 2015, so they're still a relatively new company, even though their market cap is about $5.5 billion. But it might be that they're like just like getting into the market now, getting deeper into it now. We'll look at that a little bit later when we get to the report. But this isn't great for a long-term investment. But what it is great for is for a swing trading investment, because you have so much volatility. That's really going to make it a lot easier to make some really high-quality medium-term trades in this stock. So we'll get to that in just a moment. This has been a really nice one for me. But the first thing I want to look at is whenever I see a stock that's not making any money, the first question I have is, what is this company actually worth if they don't make money? And a lot of times the best way to do that is to look at the book value of the stock. So if we go over to the key statistics, we can see that they're, first of all, they're just been growing in market cap. I mean, 6 years ago, or I guess 2 years ago, they were a $3 billion company. Now they're a $6 billion company, which is pretty insanely great. Like, that's some really nice growth. But if we scroll down real quick, we can see that the book value per share is about $25.51. So for a $70 stock, 22 bucks or so, $22.51, 22 bucks or so. It's not awesome, but it's not like hideous. I mean, it's like decent. It's okay. I would expect about a multiple of 2, so the book value times 2 would be their current share price, which gives you a predicted target of about 44. I would like to see this book value a little bit higher. It's not perfect, but it's kind of okay. Their operating margin is about 10%, and right now their profit margin is negative because they aren't making any money. But they used to make money, so I think this is something that is a little bit of a deeper-rooted factor that we're going to look at a little bit closer. But what's cool is they don't really get great return on assets or return on equity. I think the reason why is because they're so heavily invested into research. Like when you're a really high-tech company and you're like selling stuff like macro materials processing, or like this sounds like really complicated stuff that takes a lot of research to do. And so I'm guessing that they're constantly like reinvesting into their employees or reinvesting into scientists or something to make these very complicated fiber-coupled diode lasers. Like, if I knew what that was, I would tell you what it was. I never, dude, I don't know what a pump laser module is, but it sounds like these are complicated pieces of machinery that warrant this being a $5 billion company and have some kind of practical use somewhere, someplace in the laser world. Though I know not what that is, they're selling the hell out of them, so they must be used somewhere. If we look, I mean, the CEO guy has got to be a freaking genius. Like, this is freaking cool stuff. It's like Corning 10.0. Anyway, if we get back to the fundamentals, there's not much else to see here. They don't pay a dividend, so there's no payout ratio. The short percent of float is pretty high. It's about 10%. That's like basically higher than what you would ever want to see ever in an investment ever. So that's going to be something that's pretty important when we go over to look at stock prices. There's like a lot of people shorting this stock, and we'll see why pretty soon. But it's a really big chunk. Another thing that's important to notice here is that a very large percent of the shares here are held by institutions. So if the institutions start to dump this, then we're going to have some serious risk of price adjustments because of that. If we look at some of the individual holders, I want you to keep in mind that the float on this stock, the total shares tradable, is about 74 million shares. And if we go over to the big institutional holders, we're going to see some big hitter names here, big funds that are holding, 9 million shares, 9 million shares, 7 million shares, 2 million shares, 2 million shares, 2 million shares. And, when your stock only has a float of 75 million and like 3 people control 20 million or 30 million shares, that really is going to hurt liquidity, and it's going to make it kind of a big risk that somebody who owns a bunch of it dumps the stock, and that could be some bad stuff. So that's kind of one of your big risks here with this company, is a lot of people own a large percentage of the stock, even though they're only a small percentage of the shareholders. And that presents a lot of immediate term risk if they decide to dump it because of a market correction or something like that. Now, moving on to financials, if you look at like their income statement, this is where things start to get really nice, because they have some really great increasing revenue. I mean, they're making literally billions of dollars a year. And like, this is just a really nice top line right here. They do a good job, like a really great job of taking in money and turning it into money. And then a bunch of it gets into research and development, which totally makes sense because like they do really complicated stuff. And then some of it's selling, but that's really the bulk of their operating. Everything else is like interest expenses because they've got some debt on the balance sheet, and that's like basically the bulk of it. So like from a financial standpoint, this company looks like they manage their cash really well. If you look at the cash flow, you're going to see a very similar story. The only sad thing about it is the net income is negative, which isn't ideal. It's not optimal. I think they need to get like more clients and sell more stuff so they can increase their net income. We'll look at the report in a sec, but I think probably the biggest reason why is just because they're struggling a little bit to make money, which deviates a little bit from their top line revenue, but everything else here is pretty normal. They're purchasing investments and they're repaying debt. They're paying about 500 million a year right now, which is a lot considering it used to only be like 10 million or 6 million. So I'm thinking they probably bought something really big, like maybe an acquisition of $620 million. And so they're probably paying that off for whatever company they acquired, whatever asset they acquired. And so that's probably an investment they made in the company after they had this really awesome year that might have actually led them to have a bad year this year just because of that gigantic acquisition. And so hopefully we'll see that reflected in the balance sheet as some kind of an asset. If we look here, we can see they have a ton of cash in the bank, which is great. A lot of receivables, a lot of short-term cash, and a lot of inventory, which isn't ideal. Like usually you want to see companies that just like flip their inventory really quickly. These guys have about 225 million in inventory, which is a pretty big chunk for a $4 or $5 billion company. That's a pretty sizable amount. If we look at over here, their plants and assets and stuff like that, it's about 770 million. This is nice. They have a lot of nice real estate, not of just really solid asset investments. And when we go over to liabilities, it's a similar story. The biggest thing here is going to be long-term debt, and everything else is just pretty much a normal part of any kind of liabilities. And so at the end of the day, they have a positive shareholders equity, which is nice. That's super good to see, especially for a company that's losing money. It's really reassuring to see that they do have a positive shareholders equity. And just in general, the books aren't like perfect. There's a couple things that could be better, but they're pretty solid. They work pretty freaking well. If you're wondering where all that debt came from for that big acquisition they made, it looks like they acquired this company called Oclaro, for about 1.8 billion last year, or I guess 2 years ago. And I guess basically these guys have photonic capabilities. So some stuff in the laser industry, which is apparently what they do, is make cool laser thingies. Apparently they acquired this company that was good at making like laser things, which is cool. They're expanding, buying competitors, shows that they're serious about the positioning that they take in their market. Apparently they sold the optical components, so I guess it made sense to acquire them and implement them into the company, which is super, super cool and interesting. Now, here's where everything starts to get really, really fun, and that's when we get over to the actual stock chart. And this is like, so good. I've done a couple of trades on these guys in the past, and the reason why is because they respond really, really, really well to technical setups. Now, before we break down these trades, there's one thing I want to show you first. It's really, really critical that you understand going into this, and it's a symmetrical wedge. So the way a symmetrical wedge works is really, it's simple. Okay, you have sort of this price and kind of a little bit more like this. I freaking made this trade too, and I totally messed this up. I'm sorry. It was an upward wedge. Okay, so just give me a little leeway here. So basically, the way this works is you have this top line resistance, which is super flat, and then you have this bottom line support, which is kind of curved upward. And this right here is absolute gold for swing trades. Basically, what happens is you want to kind of short it towards the end of the wedge, but before it actually breaks out, because it'll break out pretty quickly. So you kind of short it like right here-ish, and that's what I did here with Lumentum. And I did it a little bit early just because I wanted to get in on it. I didn't want to miss out on the symmetrical wedge. And I set a stop loss right here. So here's sort of the upward wedge on the bottom, and then here's your top line resistance. And so you just kind of, you short the stock here. And then I remember one day, like it was like in the matter of like one day, the stock went down. I think it was like 46%, or maybe it was like 20% or something. It was a really good day when they opened up that day though. And they just went down like instantly. You had like a MACD cross, you had sort of the stochastics crossing 50, and there was just this gigantic drop in the stock price in a very, very short period of time. I'll kind of erase this so you can kind of see it. It just went straight down. So that was sort of the first setup that it traded on these guys. It turned out really, really, really well. And I closed it pretty quickly, and it finished up. But now the stock has actually gone up a whole bunch. So the question is, is this increase in value, is it worth it? Is it justified? Is this going to be a great long-term hold, or is this going to come back down now to maybe 58 or so? Like that's kind of the big question, because the easy trade was this wedge. And now that the easy trade's done, the question is, what is the future for this company? The first thing we're going to look at is the report, because I really kind of want to understand what's going on with first of all, what the company does, but more importantly, like how they work in their market, because this is a pretty complicated market. So it looks like a lot of their revenue comes from telecom, and then a little bit comes from datacom, and then the rest of it, I guess, would be like laser opticals. Like, I want to be honest, I am not up to date with my laser industry, but apparently they sell to Apple, Huawei, Ciena, and Cisco, which I guess is for their networking needs. So I'm guessing they sell like fiber optics, and they use that for like 5G internet or gigabit Ethernet. And I mean, basically they're in the tech industry, they're in the tech market, and they're selling to people in the tech market. So, I mean, I think, just generally, they've got a pretty nice little subsector of the market mapped out for themselves, and they're selling to people that have money, which is really good. They're not trying to like sell your mom or your dad a fiber optic cable. Like they're selling to like really big corporations that have lots of money, which is really good, because you want to sell to people that have lots of money so that you can get lots of money as well. And that's exactly what Light is doing, and they're doing it really, really effectively, which is, I think, one of the things that's been really, really helping their stock come back from the downward wedge, which is great. And the second thing I want to focus on here is, if we keep going on to this report, what we're going to see is actually pretty interesting. They talk about how the industry they're in is actually growing very quickly, and it's growing beyond a small number of large service providers into a variety of open. I mean, it's just becoming a lot more people. Because more and more people are using sort of fiber optic cables like Google Fiber and stuff like that. And so because of that, they are having a pretty freaking nice increase in demand with high-end routers, switches, stuff like that. Basic internet routing stuff that's not going to go away is really fueling demand. So they have a really, really nice little market sector where they're serving like 100G and higher data rates, and they have 3D sensor tech, which apparently is the coolest thing ever for transferring videos and photos. And so what they're doing is super useful because lasers are apparently like the core of, and here they say they compete against companies like Akai, Link, Ag, Broadcom, and some other ones I can't pronounce, and Mitsubishi and Sumitomo. And so I guess they have competition. If I knew this market better, I'd be all over these companies. Just looking at it holistically, apparently they do have a lot of competitors. So that's kind of one risk here that kind of A, marginalize their profit margins, and B, they could lose clients to other people, which keep on going down. We can see basically that their strategy is to leverage long-term relationships. So basically sell to people that they know over and over and over and over and over and over again. And like that's a pretty solid strategy. Makes sense. They've got a lot of people. They do a pretty solid job on sort of selling to people that use their technology to put it into consumer products. So they're kind of like a back-end middleman in terms of like where they stand in the product development line. Like that's kind of their story. There's not much more to it from what I can tell. And so that's kind of something I like. Like I like to see companies that are simple and that just like are basic. Look, this is our stock. This is our index. We do nice performance, and I'm sure they cherry pick this data, but you know what? It looks pretty nice. And it's good to see if they just have like one thing they do, and that one thing accounts for $1.5 billion or something like that. Like that's some pretty nice stuff right there. That might be 1.5 million. I would refer more so to the finance numbers on Yahoo. But then they talk about their laser business and how they like sell lasers and stuff like that, which is super cool, super high tech, and really interesting. Like. I just kind of want to know that they make money, and it looks like they make money, which is good. I mean, they sell stuff and they make a gross profit, and that's pretty nice. The numbers look pretty solid. I want to see these guys sort of like actually become profitable. I think that's going to be one of the key staples to them being a quality long-term investment, is have a stable and consistent positive EPS. But I mean, as long as they can do that, this looks like a pretty good company. I'll be a little bit weary of it just because it has historically been so volatile. You're probably going to want to keep a tight stop on these guys because if you don't, you could have an overnight swing that could really kind of hurt your account just because they aren't like especially well established. They've only been around for like 5 years or so. And so it's not like the Apple of its space. It just isn't there yet. But they're trying to get there, and it shows because they have that overarching long-term debt. They've made prepayments to their suppliers, and they're really out there trying to build a name for themselves. And so, really, it looks like a fairly reasonable proposition and a pretty nice company in most terms of the words, in most terms of the phrase, and in most ways you'd really look at a company. Another thing you're going to see here is that they grant their employees 401ks, which is awesome, shows that they care about the people that work for them, and always just kind of something cool to see in an annual report that you won't really see sometimes. A lot of people glance over their employee support programs or their employee benefits, and I think it's nice to see it in a report because it shows that the company actually cares about people that work for it more so than like just the bottom line. And usually the more you care about the people that work for you, the better they work, the more it contributes to the bottom line, or to the top line. And it's just an overall good principle and something that you should kind of focus on, is caring about the people that you work with. And it looks like that's what they do, which is great. And then I guess they just have some references and some documents here about some of the transactions and the acquisitions they made. And that's kind of about it. What you get from this is pretty simple. They have some competitors, they're a little bit new, they have a lot of liabilities and people that they gotta pay, mouths to feed, and they're trying their best to make money, and they do a nice job accounting for it. And I think that's kind of the big takeaway here. And really the big thing with Light is, you don't have like some magic golden goose company that's like the best thing ever, but you do have a company that's like reasonably solid And if you see a setup on it like this wedge or something like that, like it's a company that I'd be really, really comfortable taking a swing trade on for like 8 months or so. In terms of like, is this a quality long-term investment? That's a question that, I really don't think I know enough about the company or about the sector that they're in to say much about that. I mean, it sounds like they're in a good sector, but like, I don't know if I'm gonna wake up tomorrow and the laser and optics business is gonna be down 20% or not. It's really just not something that I'm very versed in, which makes it a difficult thing to say about long-term, just because like long-term, like, I mean, look at their website, right? Like, does this look like the website of a $5 billion company? Like, if you ask me, the answer is no. And like, I don't know like how these little mechanical transistor things are turning into to billions of dollars for them. Like, but if they are, like, that's great. You know what? That's really cool. Like, congratulations. Apparently, if you look at their financials, somewhere or another, they're bringing in like $1 billion in top line. So, $1.7 billion in revenue. So they're selling something. They're selling a lot of something. I don't know, like, really, like, what. This is a really strange company. If you look at where their offices are, you'll notice that like a lot of the company, or probably a vast bulk of the company itself, is based internationally, kind of like near plants in like Europe, but also in like Asia and I think that's Korea, or Japan, Japan, Thailand. So that's gonna really be, it's gonna really give these guys a lot of international exposure, which is usually good, but right now with like the virus and everything, it's really not so good. Especially with like this global slowdown happening, it's really not good to see these guys so internationally diversified, because it means they're going to be exposed to a lot of risk from like the outbreak of the virus, but b, a lot of risk in international trade markets and currency markets. Like some currencies are down like 4, 5, 6, 7% in like a week. And some of that's because of oil, but a bulk of it's because of like international unrest, and that's really something that scares me about this company. And so when we look at like taking a shorter term trade on this, I want you to think about that international risk exposure alongside the traditional risks of this company. And let's kind of take a look now and see like what sort of makes sense for what's going to happen next with these guys. In the long term, like these guys have done really well. This stock has kind of just gone straight up. And I don't think that's like extraordinarily reliable, and we've proven in the past that it's not going to happen every single time. But I think the question is like, what is next for light? And from someone who doesn't really know the ins and outs of the laser optical market, I think really the most important thing here to look at is when we have a crossover on the MACD and a crossover of the stochastics at the 50 level. Last time this happened, they went up a bunch until the MACD crossed again and they failed. They had a crossover here on the MACD, they crossed over the 50 on the stochastics, and they went down, they went down, they went down. They had a little bit of a cross here, but then it went right back over here and it kind of invalidated itself, and then it fell out of this downward wedge, or this upward wedge, which turned out really well. If we look back a little bit more, we're going to see a very similar trend. Crossover on the MACD, crossover of the 50 stochastics is going to give us this nice downturn until it crosses over again. And I think that's really the play that we're looking for here. So if we come into the more recent times, and you should do this exercise too, with whatever the stock's at whenever you're watching this, you see the crossover here, this cross of the 50 here, leads to a nice uptrend until it has this little crossover to the downside, but then it crosses right back over again, kind of invalidates it. It has this really nice uptick, which is pretty sweet. The stock went up 20-30% here, which was really good. And that kind of gets us to where we are today. And what I want to focus on here is the exact same thing. We've got a crossover on the MACD and a crossover of the 50 level of stochastics. It just like based off of the general economic slowdown right now, I think that alone is enough to warrant like seeing these guys go down to, I'd say, like 64 pretty easily. I think they're actually at 64 pre-market today. They were at 64, 66 pre-market. I think like pretty conservatively, these guys should probably go to like 58 or 50. I think 50 is a pretty reasonable target for this downtrend. And so that's kind of the play, for I would say the next 4 months on Lumentum, is really what you're looking for here. Is these guys to just validate this crossover on the MACD and the stochastics, and go down to, I would say, probably the 100 weekly moving average, or the 200 weekly moving average if it really starts to crash. And I think that could really happen by like late April. What we're gonna see is something pretty sweet. So if we pull up, I'm thinking like April 24th, or May like 15th. They don't have May 15th, so we'll do like, I guess, May 1st. If we call our target on this trade, give or take 50, we'll call it 50, okay? I think you guys can pretty reasonably get to $50. Call our target 50. You can get like 64 strikes. Oh wait, never mind, those don't have any volume. Maybe these have volume. I don't know why. Okay, that's really weird. I guess you can't trade these strikes. But you can get 60 strikes for $3 or $4. I'd say $4 here on the 60s, and that'll give you an inherent value of $10 a share. So you're looking at about 2.5x return on that, which isn't like the best, but it's still pretty nice. If you were to do straight equity on this and short at like 66, you're looking at a $15 profit on that, which is 15 by 65. It's about a 20%, 23% gain. Stop loss on this trade is like 72, so that's about a $6 risk, so about a 10% downside on that, which is, you can probably tighten that up if you really wanted to, but I would keep it kind of right here at like 70, 75. Stock's down a lot pre-market today, so that could be one thing that could hurt it a little bit, but this is still a really nice valid setup, and I think you're looking at like probably 25% here if you do straight equity. And looking at like leveraging it with the options with these May contracts, you can do like 65 puts that'll be worth, I guess, $15, and those are about $5. So you can kind of triple your money on those, and you can also set a tight stop loss on those. So if it goes like $4 out of the money, you could get out. You would lose about 40, maybe 30% of the value on that. If it's only the ask, you'd probably lose about 20%. So you're risking about 20% to make about 300%, which is a pretty nice ratio. The far out of the money ones are a little bit riskier. I do like these 55s, so you can get 55s for about $2, and those will probably multiply by about 3. You'll have an inherent value of about 6 on those, with a conservative target of like $50, 47. And that's something I think that could work out really well with these guys. They kind of cross below this moving average here. They fall down a bunch. It's not like a 10 out of 10, like 10x trade, but it's a nice trade you can make. I really like just a short-term trade on these guys. To pick up a swing of like a 100 or 200 or 300% gain. It's nothing like ballpark crazy, but if you just had a tight stop on this, it should be a reasonably simple trade to make. And in the long term, like this looks like a nice company. Like they could bounce off of this 200 moving average, or to be honest, they could kind of do something along the lines of what JD did. When JD, like right after, I remember they got a gigantic, like $100 to $200 million investment by Google. And I remember I saw that and I was like, whoa, no way. Google bought their stock? That's crazy cool. They must be like one of the coolest stocks ever. And so I remember I like rushed over to JD stock to buy it. And thankfully I had a stop loss. Like every trade you ever have should always have like a tight stop, like at least a stop loss. It doesn't even have to be a tight stop loss. Just have a stop loss, okay? But here, we'll pull up this chart real quick. Yeah, so Google made this giant investment in them. It was like $45, and then the stock just tanked and tanked and tanked. And it came out of this 200 weekly moving average, and I thought, wow, that's a cool buy. I should buy it. And then I bought it, and then it went like down immediately, and I was like, crap, but I got stopped out. But then they bottomed, and they crossed over on the MACD, and they crossed over the 20 on the stochastics. And then it was a really nice buy at like 20, and then they doubled again, which was nice. It kind of helped me out a lot after the temporary pain. It was a pretty tight stop though, so it wasn't that bad. But I think that's kind of what we could see happen here with light, is bounce off this right here and they go up in the long term, or kind of less optimal is they kind of crash through it and they go down to like 30 or 40 or 50 bucks. And honestly, like, I think that is more determined by the market than it is like the individual company here. So if the market keeps on crashing, then these guys will likely keep on crashing below here, and those puts could have about a 10x return, maybe 15. And if just based off of them having an inherent value of an extra, give or take, $15 right here, which is about 15 bucks on a $3 put, is another 5x return on top of the additional 5x return. It's about 10x return, which is really, really sweet. And so I think that's kind of your like best opportunity, your golden play here, is for them to go straight down. What'll probably happen is they'll come down here and they kind of bounce around this 200, and then the puts will expire because just the time of them. If you go straight equity, you've got a pretty solid play here of them probably kind of consolidating down, consolidating, and a pretty nice upside here. As soon as the markets reverse though, like these guys should hopefully go back up, because they do look like a nice company. And so the trade here isn't really as set in stone. What I would really do is I would follow a crossover on the MACD alongside a crossover of the 50 stochastic level, and I would really just base the trades on that for these guys. And you can make like a solid 8 trades, I would say. This is like, you gotta trade like 1 trade, 2 trades, 3 trades, 4 trades, 5 trades, 6 trades, 7, 8 trades in a matter of just a couple of years. Each of those trades are like 20, 30, 40% trades, and if you leverage them with options, they're hundreds of percentage points. This is a stock that in the long term, its future is kind of up in the air and a little bit difficult to understand. But in the short term, this is a really, really nice stock to swing trade. It's one that I'm always going to have started in my portfolio watch list, because if this thing moves, I know that I can take a quick trade on it, and within a couple of months, like maybe a month or just a couple of weeks, these guys can yield some really nice returns shorting, and on the buying side, just give it about 2 months or so, and these are some really nice, really solid swing trades here with Lumentum. And that's kind of the big takeaway. It's a really nice stock swing trade based off of basic fundamental technical analysis, like MACD crosses and 50 level crosses in the stochastics. And you just use that and you base it off these moving averages, and you look for setups like wedges, and you're gonna have some really nice luck here. I would just map out your support resistance levels, and as soon as they get below 66, which is the nearest support level, they're basically going to be in free fall down to the moving averages, and that's really the play. And the big takeaway here with Lumentum Holdings Light. Hey, this is John. I want to thank you so much for making it to the end of the video, and hope you get a ton of value from the stock that we just broke down, and hopefully learned a lot about them. Now, what's cool is if you have an investment that you think will look really nice, or maybe it's a potential investment that you're on the edge about, or maybe it's a stock that you're holding right now that you're just a little bit curious about, or maybe you want to get an outside perspective on it, what's cool is if you comment down below with the ticker of the stock, I'll actually put it in Queen for a potential new video coming out. Now, make sure you also subscribe so that when those new videos do come out, or when these new stocks do come out, you'll be able to get, YouTube will know to send you the stuff, and if you click the bell, you'll actually directly get a notification so that you don't miss any of the new investments that we break down on this channel. Now, what's also cool is if you want to learn how to outperform 99% of investors and radically limit your downside, even if you can't pass a finance test for your life or have nothing to start with but a few spare bucks, I want you to open up a new tab right now, or go to a new browser, wherever you are, and I want you to go to stockmarketsecretsexposed.com. And inside Stock Market Secrets Exposed, you get instant access to a course I used to sell for thousands, a very high-level seminar I gave. The students literally go through and in their first month make 5, 6 figures, and I can't guarantee anything, but I know for a fact that this stuff works, and it's gold. What I want to do is I want to give you this course I used to sell tons. I want to give it to you completely for free, so you can learn the top 35 secrets that you can use within the next week to really crush your portfolio, really double it, and radically limit that downside. So if you want instant access to that, what you got to do right now is open up a new browser tab and go to stockmarketsecretsexposed.com, and I'll send it to you for free. Okay? Sound cool? Sound fair? Thank you again so much for watching, and I will see you either in another video on here or over in the masterclass. Thanks. Bye.